Hello, good morning, good afternoon, good evening to you, dear friends. I thank you, each every one of you, for choosing and watch my channel on social media at any time of the day. I would like to introduce myself once again to you for those don't know me. Myself, I'm Ramiz from Turkey, and I do work as foreign trade consultant dealing with the precious metal trading, supply chain services, marketing and sales. I have been away for a while from social media, but now I'm back and I'm together with you. Today is 22nd of September 2025, and I will leave your presence by providing some explanation about the precious metal sector, what is happening. As you do know, there are many ongoing issues around the world, military, political, social issues, and these inevitably affect the business world. Now, I would like to give you a few minutes and watch these two gentlemen, what they says, and I will be right back to you. Okay? Watch now.
About 400 tons left to deliver. So really, in summary, into dwindling overall COMEX open interest, the CME LMBA market makers in both gold and silver are increasingly becoming price takers. To those looking at analyzing the house-generated COT reports, which I know a lot of traders do, the fact that these reports fail to indicate the degree of COMEX to FX spot imbalances, i.e. that which lots are hedged or not hedged, what gold is doing is flagging a risk about US debt that other assets simply are not. And with that in mind, there's never been a better time to opt out of the debt-riddled fiat system by simply swapping your debasing dollars, euros, pounds, yen, whatever, for physical gold and silver.
Andrew's breakdown underscores a reality that Western policymakers can no longer ignore. The pricing power for gold and silver has shifted east. The Shanghai Gold Exchange and BRICS accumulation strategies are not temporary responses to U.S. monetary policy. They are part of a long-term structural realignment. By forcing delivery, rejecting unallocated contracts, and demanding physical settlement, these nations are dictating the new rules of engagement. For investors, this means that the days of trusting paper price signals are over. The implications for silver are even more dramatic. With deficits running at 200 million ounces per year and industrial demand accelerating, the physical market is already stretched to breaking point. The U.S. mandate to classify silver as a critical mineral is an acknowledgement that its importance extends far beyond monetary value. It is vital for national security, technological leadership, and the energy transition. Yet Washington's lack of reserves leaves it in a reactive position, forced to buy at ever higher prices. Gold, meanwhile, is poised for a revaluation that could redefine sovereign balance sheets. As Andrew emphasized, the Fed's short positions are unsustainable, and like the Bank of International Settlements before it, the U.S. will eventually be forced into Basel III compliance. When that happens, the adjustment will not be gradual. History shows that monetary resets often occur suddenly, with little warning, leaving unprepared investors exposed. Taken together, these dynamics represent a perfect storm: geopolitical confrontation, structural market deficits, and a loss of Western control over pricing. For well-informed investors, this is not a time for hesitation. Positioning in physical gold and silver now, before the full impact of these shifts is priced in, may prove to be one of the most significant investment decisions of the decade.
We want to store our own gold. Let's have it back. So this is fatal, really, for the paper market. And I suspect that the second half of this year, we're going to see this. Now, the problem you mentioned sort of wider quadrillions and all the rest of it. The problem, of course, for the derivatives market is that many of the actors in the bullion markets are also acting in other derivative markets. So if you've got counterparty risk escalating in bullion markets, then you've got counterparty risk escalating everywhere. And this is going to be actually well, let's put it this way, as the Chinese would say, interesting. The other thing that's interesting in this is we see the gold price rising, up close to all-time highs and so on and so forth. The amount of interest in the West is actually pretty low.
Well, you listen both gentlemen. You may agree or disagree. However, there is one certain point which understandable, good enough, clear. Gold is a timeless investment for all time. Dear friend, you can be a gold jewelry manufacturer company owner. You can be a gold refinery company owner. What basically do you need to keep alive and running, functioning your business? Raw material. Another word is gold. Where can be purchased gold with the best deal and price? In Africa. You are right. Dear friend, we are at service in Guinea, in Mali, and as well as in Sierra Leone. We don't have any issue regarding to our supply chain services. We are running nice and smooth. According to some, the increase in gold prices was prevented last year. And last year, by 2024, end of the year, we've been expecting $4,000 per ounce. And it seems this year it cannot be held anymore. So today, 22nd of September, per ounce price is already in terms of US dollar 3,715, and 24 karat gold bar in terms of US dollar per price is already 119 and 446 US dollar. And according to some geographical location, it's been already crossed 120,000 US dollar. So I kindly advise you, get your commodity, secure it now before the hurricane. Thank you very much for being with me, and I would like to leave you my superior with Mrs. Wilhelmina Ford. She is going to explain you how the way is supposed to be purchased gold commodity in Africa according to golden rules. Thank you and have a wonderful day. Stay positive and safe. Bye.
Gold is scarce. Gold is king. He who has the gold makes the rules. The country is making the rules. Now going back to the central bank, you've been asking. Many years ago, you said, oh, Wilhelmina, I'm going to pay the gold in central bank. No, you have to pay this gold to the owner of the gold, so that the seller can send a letter to the central bank that he's going to export to you. Then the central bank, okay, you bring the gold stays at the central bank. Now when you come to the office, you bring your own gold there, you can see it. Then you make a payment. You make an initial commitment. It's not upfront, because we don't ask you upfront. You have the money in the bank, we have the gold. So then when you make a deposit, the seller, the owner of the company, will process the export documentation. The balance, you have to transfer again before the gold leave the country. Now you're gonna say, well, Amina, what is the security? I'm gonna be with you from the beginning to the end. You don't need to worry. Just show me your credential. We don't bring gold to you. You have to come and establish your business relationship to us.